Hello, I'm Bernard Hickey from interest.co.nz and welcome to a special investing report. The credit crunch, it is certainly far from over, judging from what we've seen out of Australia in recent days. Babcock Brown, you may not have heard of this company. It's an infrastructure investment company, very big in Australia, and following on from the model created by Macquarie Bank, the so-called millionaire's factory. Babcock Brown goes around the world looking for infrastructure assets, including power assets in particular, uses debt to buy them, and then puts them into funds and sells them off to retail investors, often in Australia, and it collects fees along the way. Over the last few days, Babcock Brown's share prices, and there's several of them, including Babcock Brown, Babcock Brown International, Babcock Brown Power, they've all fallen sharply because investors have looked closely at its structure and seen that it's very heavily weighted with debt. And with this credit crunch that's going on, people are wondering, can they roll over that debt? Can they get new debt to fund the old debt, which is maturing? And they've looked at Babcock Brown's share price, which fell 30% on Friday, and saw that its market capitalisation has fallen below a threshold of $2.8 billion. Now that means that a debt of around about the same level that it owes to the banks is up for review. And over the next couple of days, Babcock Brown will have to visit its bankers, and they include ANZ, National Australia Bank, Westpac and Commonwealth Bank, to see if they can roll over that debt. Now, why does this affect us here in New Zealand? Well, obviously, Babcock Brown doesn't sound like a big company, but it actually has $72 billion worth of assets globally and $46 billion worth of debt. Now, there's an old saying that debt is no problem until it's so big it's a problem for the banks. Well, in Australia, Babcock Brown is a big problem for the banks because it has $46 billion worth of debt. Now, not all of that is with the big four Australian banks, but a large chunk of it is. And so they'll be very careful to make sure that Babcock Brown survives so they don't have to take big losses on that debt. And of course, the big four Australian banks are also our big four banks. ANZ obviously owns ANZ National here, National Australia Bank owns the Bank of New Zealand, Westpac here too, Commonwealth Bank owns the ASB here. So the credit crunch is far from over, and there may be further fallout from that here in New Zealand. Babcock Brown Infrastructure actually owns one of our power companies, Powerco, a New Plymouth company, bought it for over $1 billion a few years ago, again funded with debt. And also Babcock Brown is involved with the Jacks Point project in Queenstown. If you've heard of this, this is a big residential development built around a golf course, they often are. And that is funded partly by Babcock Brown. Another company that's exposed in Jacks Point is Hanover Finance. So that was an investing report from interest.co.nz. I'm Bernard Hickey.